As far as I'm concerned, as long as that same respect and recognition is not shown toward every one of our people in this country, it doesn't exist for me. And during the few moments that we have left, we want to have just an off-the-cuff chat between you and me. Us. We want to talk right down to earth in a language that everybody here can easily understand.
Welcome back to another episode of The Malcolm Effect. Joining me is a voice you've heard before, and I'm super excited and happy that they're joining us again. Professor Radhika Desai, how are you and welcome back to The Malcolm Effect?
Lovely to be here, Mamadou.
It's an absolute honor and privilege, and a voice you're familiar with, my co-host, Christian Joseph. Let's just get straight into it. I want to understand this episode, neoliberalism, and the material conditions that produced the moment that we call neoliberalism, and also the subsequent financial crashes as well. So I guess just to kind of get people situated, when we say neoliberalism or when you invoke neoliberalism, how do you understand it and what do you mean?
Well, neoliberalism can be understood as an ideology. And in terms of the content of the ideology, it's basically about free markets and free trade. However, in order to fully understand neoliberalism, you also have to understand its relation to the reality. And the reality has been that neoliberalism emerged and then re-emerged. So it emerged, I would say, in the late 19th and early 20th centuries, and then it re-emerged in the late 20th century, sometime around 1980s onwards. And throughout this entire period, the reality has been that capitalism had already become monopoly capitalism. So that there is a big distance between the rhetoric of free markets, the ideology of free markets and free trade, and the reality of monopoly power in all the Western countries. So I would say that that's the first thing I would say. Then we can explore the content of neoliberal ideology. So the neoliberal ideology basically is the ideology which says that markets are good and the state is bad, and that if left to itself, markets will function optimally as best as possible, and any interference by the state will only make things worse. Of course, in reality, neoliberalism has witnessed the state interfering a great deal in the economy, but the type of interference is such that it favors not ordinary people. The interference does not, for example, create welfare states or regulates the economy in favor of some broad public goals, but it interferes in the economy in order to increase and augment the power and income and wealth of a small number of really rich people and the biggest corporations. So historically, neoliberalism emerged in the 1970s in the context of the crisis of the post-war order, which was not a neoliberal order. It was an order in which capitalism was very heavily modified with large amounts of public ownership, strong trade unions, considerable amounts of welfare legislation, relatively high wages, a fairly high degree of labor and other such regulations, etc., etc. So this order essentially entered a crisis. Now, we can discuss the causes of the crisis. Some people said that it was caused by these regulations that shifted the balance of power a little bit in favor of working people. And then others, a small number of others said, no, the problem is the fact that we did not reform it enough. We left too much of the capitalist character there. But of course, the first set of people won, and the result of their victory was the implementation of neoliberal policy. So in concluding my answer to your question, let me just rattle off what are some of the main elements of the neoliberal policy paradigm. So the main elements are that you have to cut back the role of the state, cut back social expenditure, privatize public property. Within the what remains in public hands, you should contract out as much as possible of the services. So, for example, if certain hospitals or schools remain in public hands, nevertheless, for example, say the laundry in the hospitals or the cleaning of the schools, etc., as much as possible, things should be contracted out to private companies. So contracting out, deregulation. So, remove the regulations. They are stifling capital and preventing it from being productive. Attack on the power of trade unions, and decrease in fiscal deficits, although that's never achieved because although social expenditures keep being cut, neoliberal governments also keep cutting taxes. So actually, the neoliberal era has seen an expansion in public deficits. But anyway, that's one of the elements of the ideology.
Mhm.
And finally, monetary policy, which is aimed at defeating inflation rather than keeping unemployment low, which of course works in favor of the interests of rich people and works against the interests of poor people who must suffer higher levels of unemployment. So let me end there, but that's a broad answer to your question.
No, thank you so much. And oftentimes when we speak of like the kind of inauguration of neoliberalism, what seems to have either concomitantly or precipitated it, we speak of the certain economic crashes of the 70s and 80s. How do we understand this, like the neoliberal response, it seems, to these financial crashes? And what were these financial crashes?
Well, that's a really good question. So, first, let me just say that compared to the post war decades, the golden age, the age of the Keynesian welfare state that I was referring to earlier, compared to that era, roughly 30 years after the Second World War, the neoliberal era, which we can date from approximately 1980s onwards, has been characterized by unrelenting financial crises, currency crises, banking crises, and so on. So, a whole range of monetary and financial crises. And whereas in the previous era, there were practically none. And the reason for that was, of course, that in the previous era, money was not allowed to circulate around the world freely. Every country had some or the other degree of capital controls, or most countries did, which means that capital flows were not free. And I think this is one of the key reasons. And of course, the other reason is financial deregulation. Part of the deregulation I spoke of earlier was financial deregulation, which means that all the curbs that had been placed on capital, on financial capital, in order to ensure that it invested productively rather than creating speculations and creating big mountains of debt and so on, unproductive debt. Rather than doing that, it was essentially forced to channel money into productive investment, which at least led to an expansion of jobs and so on. But these regulations were rolled back, and so we got, well, when we talk about a great deal of financialization, we talk about essentially a vast explosion of debt and a vast increase in speculative activity, which is money that is trying to make money without producing anything, just by investing in stock markets, in paper assets. Okay, so that's the background. Now, the defining, in a sense, there was one crisis that actually defined the neoliberal era. It defined the beginning of the neoliberal era. In 1982, three very big Latin American countries, Brazil, Mexico, and Argentina, declared a default. They basically said they could not repay their loans. Now, and they had over the previous decade or so accumulated a lot of loans. And so it's really interesting to ask. A lot of people, of course, said, oh, well, these countries are just corrupt. They took the money, and some of their rulers simply appropriated the money, and that's why you have a debt crisis. No, the actual origins of this debt crisis is really worth examining. Do you want me to go into that?
Absolutely, yes, please.
Yeah. So, okay. So basically, what you have is that in the 1970s, you had most Western economies, all the advanced industrial country economies, going into a recession, which was a very peculiar one because normally, well, recessions don't go along with high inflation, but it was called stagflation. So on the one hand, you had essentially a slowdown in economic growth, a slowdown in investment, but at the same time, it was accompanied by high rates of inflation, the causes of which we can discuss some other time. But for now, let me just say that, and this was also, it coincided with the time the United States was forced to go off the dollar. The dollar was, in the post Second World War period, was supposed to be backed by gold. So in order to persuade other countries to accept the dollar as the world's money, the United States essentially promised that it would be backed by gold at the rate of $35 for 1 ounce of gold. And this was supposed to be the dollar backing, and that allowed the dollar system to prevail. But actually, this dollar system was already in crisis for a long time, already by the 1960s, and most of the 60s it lurched from one crisis to another. And in 1971, finally Nixon had to throw in the towel and say, sorry, folks, we can no longer exchange dollars for gold. We are no longer going to do that. Mainly because all the United States trading partners had already demanded so much gold in the previous decade that the United States had no gold left, or not enough gold left to back the dollar with gold. So they were forced to break the dollar's link. Now, then came, and all the other rich country governments, European governments, the Japanese, etc., they all wanted now to have discussions about how we should recreate the international monetary system on a new basis. And many of them recalled the proposals that Keynes had made back in Bretton Woods in 1944. Which would have not required the dollar to serve as world's money. And they said, why don't we try something like that, etc. These discussions were going on. And of course, once the dollar went off gold, the value of the dollar plummeted massively, creating enormous currency chaos, etc. Now, what the United States did at this time was, in order to prop up the value of the dollar, they did something really interesting. They so in addition in addition to the dollar going off gold, another thing had happened, which is because the dollar was plummeting in value after 1971. All the countries that were the oil exporting countries, they basically said, look, our price of our oil is set in dollars, but the value of the dollar is going down. So now we are earning a fraction of what we used to earn. So we are going to quadruple the price of oil. So they quadrupled the price of oil. This, of course, hit many oil importing countries, Europe being very big there, Japan being very big. And so these countries and the governments of these countries were very anxious to try to do something about it. So they tried to initiate discussions about how, what we should do is we should try and get the IMF to try and get the oil export. They said, fine, you guys need to earn enough money, so we are okay with you raising the price by 4 times. But what you'd like you to do is, why don't you deposit the surpluses you are now accumulating as a result of the 4-time increase in the price of oil? You deposit them in the IMF or some IMF created facility, which would then lend us the money in order that we may be able to purchase the oil that we need. Because the sudden increase in the price of oil made it very difficult for them to find the money to do this. But the United States played a very Machiavellian role. Kissinger was the Secretary of State at this time. And they played a very Machiavellian role, and they essentially kiboshed these proposals. They rejected them, they nixed them. And instead, they persuaded all the OPEC country governments, the oil exporting country governments, to deposit their oil surpluses in Western or Western oriented financial institutions in dollars. And of course, by this time, to a certain amount of deregulation, particularly of the British financial system, had meant that there were a lot of banks there that were accepting deposits in dollars. There were also American banks and others. So all these banks were now, you'd think that these banks would be very happy that they were suddenly receiving all these vast deposits in dollars. However, there was a big problem, because if you're a bank, you may be pleased that you're getting big deposits, but these big deposits create a big problem for you, because you have to pay interest on these deposits. And how do you pay interest on these deposits? You lend the money out again, you earn interest on that, so that you may then in turn pay interest on the deposits you are receiving, naturally keeping a small or big difference in between those two, the rate at which you lend and the rate at which you borrow. So, okay, so now with all these surpluses coming in, all these banks, American banks, British banks, and other banks that were accepting these deposits, essentially had went out on a lending spree. They went out looking for borrowers. They said, "Look, would you like to borrow some money from us? We have lots of, boy, do we have a deal for you." So essentially, they went to practically every third world country and even many communist countries and offered them dollar loans. Now, remember that at this time, many countries, of course, accepted, chiefly because they wanted to invest this money. Many third world countries at this time wanted to invest this money in expanding their, the considerable industrialization had taken place already before the 1970s, and they now wish to expand this industrialization. So mostly countries borrowed for such purposes. Undoubtedly, there was some corruption, but that was the main purpose of such borrowing. Now, when this borrowing took place, remember this is still in the 1970s. The West is in recession. Inflation is sky high. Interest rates they are much lower. So that the real interest rate, which is the difference between the rate of interest and the rate of inflation, was negative. That is to say, the rate of inflation was higher than the rate of interest. So that meant these countries they were essentially being paid to borrow money, or they were borrowing money at next to at bargain basement prices. So they were happy to borrow. Now, however, and of course, observers in Washington were sitting and looking at this. They said, okay, we managed to save the dollar. We managed to save the dollar by essentially increasing financial activity in dollars so that we have, stopped the decline of the dollar at least at some point. But now, what the situation this has created is that the third world countries are getting practically free money, to industrialize. And what will this do to the American dominance of the world's industry and so on and so forth? I mean, it was already beginning to decline, but it was still quite big. So, by the end of the 1970s, US policymaking elites were fed up with this situation. And they appointed a new head of the Federal Reserve, Paul Volcker. Paul Volcker was regarded as a really sort of inflation busting, known for his inflation busting inclinations. So essentially, Paul Volcker took office in very late, like 79 or something like that, and basically began to pursue a policy in which he said, I'm going to restrict money supply and I'm going to allow interest rates to go as high as they want until inflation is quelled. In the process, Paul Volcker imposed the infamous W-shaped recession on the US economy itself. So the early 1980s were a period of great pain, high levels of unemployment, etc., for American working people. But in the end, he did, after paying the cost, after creating such a recession, of course, inflation is going to go down. So inflation went down. But in the process, interest rates were very high. With inflation going down, real interest rates also became very high. And so this hurt those economies that had borrowed money at essentially negative interest rates and now had to pay big, their interest payments went up. And so this is why the Brazil, Mexico, and Argentina declared a debt default. And this inflation busting policy inclinations remained in place over the next couple of decades, so that interest rates remained very high, relatively high over the next 2 decades, throughout the 80s and the 1990s. And these decades were also decades of economic retardation in the third world countries.
Thank you so much for that much needed elaborate response. And I think that does situate us, our listeners and myself, as into what precipitated the financial crash and the kind of the role the US played and the dollar. I know in your work we speak about, well, you challenge as well, the idea of US hegemony and this idea of dollar ascendancy. But I also know the question of imperialism features heavy in your scholarship. In kind of tying this together, this neoliberal moment, how do we see that the US uses then the dollar to then kind of proliferate and be imperialistic? Like, what is this link between the dollar and imperialism?
Well, I would say there are two ways of thinking about this link. Number one, the US. So, as I've argued, as I've showed in my Geopolitical Economy, in my 2013 book, what happened is that in the early 20th century, Britain, which had hitherto dominated the world economy, was losing its power. Now, the reasons why it's losing its power are actually also very interesting, but I'm going to bracket them for now. Let me just say that it was losing its power because, contrary to the neoliberal ideology of free markets and free trade, other powers were industrializing by using the opposite methods of state directed industrialization, infant industry protection, managing trade and capital flows, etc. And those countries, by the way, included the United States. So they were industrializing by anti free trade means, let's put it that way. But anyway, their industrialization, of course, meant that British power was declining. And around this time, the United States could see that British power was declining. And they said, well, you know what? And of course, the US economy had already emerged as the biggest economy at this point, but it was the biggest among others. Okay, you have to understand that it was not bigger than all the rest combined as it was for a time after the Second World War, but sure, it emerged as the biggest economy because, after all, it's a continent sized economy. So it emerged as a big economy. And so they said, we are going to take over the role that Britain once used to play. But of course, they could not possibly match Britain's empire. I mean, Britain, as you know, had the biggest empire of the time, the empire on which the sun never set. But so the United States said, okay, we can't acquire an empire; it would be too costly to do so. But what we are going to do is we are going to make do with making the dollar the world's money. Except that they forgot one very important thing. Just because they said we're going to make the dollar the world's money, just as sterling was the world's money through the late 19th and early 20th centuries. So they said, this is what, we'd be happy with that. No empire needed. But the problem for the US was that the only reason sterling could be the world's money was because it was an imperial currency, not a national currency. And the United States has been trying to make its national currency the world's currency since then. So that's one way of looking at it. And my argument is that it has never succeeded. As we've already mentioned, this in the period before 1971, even though it was pegged to gold, the dollar system never functioned properly. And people said, we don't want these valueless dollars, we want gold instead. And after 1971, the United States dollar has rested, systematically expanding financial activity over systematic expanding dollar-denominated financial activity, which includes vast mountains of debt in dollars and vast amounts of speculation, big bubbles in asset markets, and so on. So this is the kind of situation we live in. So that's one aspect. And then the second aspect is that, of course, in this kind of financialization or these financializations that have been necessary to keep the dollar in business as the world's money, and so each major expansion has always ended in a crisis. We've already mentioned the first one, the 1982 debt crisis. There was the 1987 stock market crash. Then there was the Asian financial market. There were a series of financial crises in the early 1980s. And there was the really, mother of them all, which was the East Asian financial crisis of 1997-98. Then there was the dot-com bubble, which burst in 2000. And then there was the housing and credit bubbles that burst in 2008. And now we have the everything bubble, whose bursting has already started. It'll be a long drawn out thing. But as you will remember, in 2023, we already had the failure of Silicon Valley Bank and a few other banks alongside. And we know that all sorts of asset markets, like the treasury market, the commercial real estate market, all sorts of other asset markets are in trouble. So this is one element. But the other element is that, of course, this dollar system is actually very, very costly for third world countries. So what are the different ways in which it is costly? So number one, the dollar is systematically overvalued. And it is overvalued precisely because the dollar is not just demanded for trade purposes. If it were demanded only for trade purposes, its value would be next to zero because the United States is always running huge trade deficits. but it is also demanded for financial activity. So a small number of rich people essentially, and most of whom are headquartered in the United States, but there are also people elsewhere, they're essentially propping up this completely illegitimate system of creating the money for the world. So the dollar is systematically overvalued. And when the dollar is systematically overvalued, people who hold dollars can buy goods from the rest of the world for dirt cheap prices. And that means, everything that third world countries produce, from primary commodities like various metal ores or oil or cotton and wheat and rice and whatever it is, all the products, primary products, and also all the manufacturing products that the third world increasingly produces. These are all can be bought by dollar holders for dirt cheap. And you can see this in the proliferation of shops that sell dirt cheap things like dollar shops and whatever. These are all things that have been made artificially cheap by the overvaluation of the dollar. Secondly, the dollar system systematically diverts money from productive investment towards speculation all over the world. And the more it does that, the more third world countries have a deficit of industrialization, a deficit of jobs, a deficit of incomes, all those things. Thirdly, the third world elites can use the big casino that is the dollar financial system to squirrel away their money there. So they are, essentially cooperating in a vast sucking out of capital and value from third world countries towards first world countries, and particularly the United States. Further, the dollar system is not very good at providing credit when it is needed. It claims that that's what it does, but actually it provides credit when Western financial institutions, American financial institutions, need to earn interest from the rest of the world. So it often is counter-cyclical. It is not there when it is needed, but it is there when it's offered for reasons having to do with the needs of the creditors rather than the needs of the borrowers. So there is this crazy pro-cyclical way of giving money credit to third world countries. And what that also does is third world countries end up borrowing this money, or certain private agents in third world countries borrow the money, but in the end, there is inevitably some kind of debt crisis like the one we are looking at today. The debt crisis today is very similar to the debt crisis of the 1980s for a variety of reasons, but including the fact that the credit went to these countries because of the needs of Western financial institutions, and then increases in interest rates created a debt crisis. Anyway, so this kind of credit is really not the way credit needs to be organized. It is not a lot of the credit that flows to third world countries, when it does, is also short-term credit. It is not the kind of long-term patient capital that is needed to foster development in third world countries. There are also a few others. This system requires free capital flows. Free capital flows is really the opposite of what most developing countries need. Most developing countries need capital control so that they may regulate their financial sectors to ensure that investment remains productive, etc. So these are some of the ways in which third world countries really suffer, and ways in which the current dollar system is part of the imperialist system. I mean, it's a very, very central part of the imperialist system.
Thank you so much, Christian.
Yeah, I kind of wanted to follow up because one thing I appreciated when you talked about the history of the dollar system is the waning of British power and the sterling with the rise of the U.S. and the dollar. But I wanted to ask, given that money is very old, is using money as a tool of imperialism, or money as a matrix of imperialism, is that something that is historically specific to the current situation of the dollar, or is that something that is historically universal even before the dollar system? And then further, given that U.S. power has manifested itself also through the military, and U.S. has many military bases abroad, what then is the relation between U.S. financial power and U.S. military power?
Yeah, such excellent questions, Christian. Thank you very much. So I would say that, first of all, yes, the sterling system was also a central, shall we say, a keystone of the wider imperialist system. So let me explain. Basically, the sterling system within the British Empire, of which, of course, British India was the biggest part, And remember that when I say British India, because British India included present day Pakistan and Bangladesh. So it was a the entire subcontinent was British India. This also applied to parts of Africa which became colonized in the late 19th century, and then also Caribbean and so on. But basically, the way in which the sterling system operated was that through a variety of means, including the relative devaluation of the currencies, like the rupee, for example, or of the colonized countries, the charging colonized countries for the privilege of being ruled by Britain, capriciously providing that these colonies give certain types of gifts to Britain as and when Britain needed money. Essentially, the sterling system operated also as a giant, as a mechanism to extract surpluses from these countries and essentially invest. Another mechanism, by the way, was that the colonies, few people know this, but the United States and India back in the late 19th and early 20th centuries were, in terms of the value of exports, the biggest exporters in the world. So Britain's industrial power was declining throughout this period, from the late 19th century to the early 20th century. And in this period, the export surpluses generated by the colonies were very important in compensating for the fact that Britain was losing its export competitiveness and its export surpluses were reducing, and its trade deficits would be rising. So in this process, the colonies played a big role. So essentially, the sterling system, like the dollar system today, was a way also of devaluing currencies, did not provide loans for any kind for development, and it sucked surpluses out of these countries, out of the colonies, and centralized them in Britain. Now, Britain was not investing these surpluses in its own development. And here's another really important aspect of the imperialist system. These surpluses were then used by Britain to export capital abroad, and Britain mainly provided liquidity to the world by exporting capital, and it exported capital to which parts of the world? We are often told that, Britain supplied exports of capital to the colonies, but that would only work if in colonies you included the white settler colonies, such as Canada and Australia and the former white settler colony of the United States. For the non-settler colonies, places like Africa or the Caribbean or India, there was only a minuscule part of the total investment went to these places. So essentially, it is no surprise whatsoever that the sterling system, which you can say existed from roughly 1870 to roughly 1914, the sterling system was also the period of the sterling system coincided with the period of the industrialization of all the parts of the world to which Britain was exporting capital. Which parts were they? Europe, North America, Canada and the US, and Southern Africa, South Africa in particular, the Republic of South Africa, and of course the Antipodes, Australia and New Zealand. So these countries experienced their industrialization largely thanks to the export of capital that was taken from the non-settler colonies and sent to the settler colonies. This is why also, talking about, in literature, I find it very amusing when they talk about post-colonial studies and talk about India or the Caribbean and Canada or Australia in the same breath. I mean, this is completely ridiculous. The non-settler colonies and the settler colonies were at opposite ends of the imperial bargain, in which they benefited and the non-settler colonies lost. So in these ways, the sterling system was also a very key part of the exploitation of the colonies in its time, just as the dollar system today is part of the exploitation of the third world. And then, Christian, you were asking about the military bases. So, of course, first of all, the chief way in which the military bases, etc., are important is that one of the ways in which the military bases are important is that they essentially create a system in which enough governments in the rest of the world remain part of the US system. Okay, but of course, as we see now today with the if you divide the country between the imposition of sanctions, between those that have imposed sanctions on Russia and those who have not, the overwhelming majority of the countries of the world have not gone along with the United States, military bases or no military bases. So, in that sense, they are not working in quite the same way as they are expected to work. Although Europe has historically, of course, benefited from the bargain of essentially getting free security, and now they're going to have to do some serious reckoning. But I want to say two or three more things about this whole issue of military power. Firstly, of course, the expansion of US military power directly benefits what we call the military industrial complex, or the private sector companies, the big corporations that provide the armaments which the US and US allies order from these military powers. And of course, the expansion of NATO, which expands US allies, it has a direct function here, because the more countries that join NATO, the more countries have to buy a substantial part of their military equipment from the American military industrial complex. And this is because of the so-called interoperability requirements of NATO. So they need to buy X amount of US military equipment. So that's the first thing. The second thing, however, is that oddly enough, even, we constantly read ever more shocking figures about how much money the United States spends on its military, and how this is more than the next 20 states combined, the next 40 states combined. Depending on which year you are looking at it, you will see that such statistics are bandied about. Now, considering that how much money the US spends on its military, the US military is remarkably incompetent, because if you think about it, it has never really won a war. I mean, the US, of course, falsely claims to have won the Second World War for the rest of the world, but it wasn't the US. The US chiefly profited from the Second World War. It was the Russians, particularly, and the Chinese, for that matter, in the East, in the Asian sector, that were responsible for giving victory to the Allies. So, and of course, since then, whether you take Korea, you take Vietnam, you take Afghanistan, you take any country, the United States may have rained an enormous amount of death and destruction, but in no case has it been able to establish a regime that was suitably subservient to American interests. So if your purpose is to essentially exert military power, your power over the rest of the world, the US military has singularly failed. What's more, a final point I will make, which is that for all the money that is, all the American taxpayer money that is sunk into the military industrial complex, the fact is that even in this current war with Ukraine, in Ukraine rather, where the US is supposed to be supplying Ukraine with arms, right from the beginning of the war, people who knew where the armaments came from, who knew what the productive capacities of the military industrial complex, both in the US and the West, were saying that you cannot sustain this war because you are not able to produce armaments at the rate at which it will be necessary to do so. By contrast, Russia is entirely capable of producing the arms that it needs, and more. So this is a kind of contradictory situation in which the American military finds itself vis-a-vis its imperial power. So this is not the least reason why, of course, American imperial power is declining. And if you heard what I said about the dollar, I mean, American military power, imperial power consists of the dollar system and the military system, and both of these are now riven with internal contradictions, so that we are just one big financial crash away from the collapse of the dollar system. And of course, the US military power is declining as we speak.
Thank you so much. Okay, just a quick one before we carry on. So I think, three questions left. I know Christian has one about the elections. I have one about the recent BRICS, just a commentary on what took place in BRICS recently. And I had one question, but I think you already answered it. It was to do with, we see that the US practically has no industry but relies on finance capital. And I was going to ask about what is the nature of US capitalism today? Do you want to tackle those three? Do you think it's too broad, or?
The deindustrialization of the United States is very profoundly connected with the financialization of the US economy. So what you've got. As you have more and more financialization, more and more money is not invested productively, but rather is invested in the financial system, whether by whether it is extended as loans to productive corporations, the government, ordinary households. So all these three categories become heavily indebted, and that's why we talk about so-called zombie firms, because these firms are simply, they are so indebted that they are not able to make enough profits to clear, to pay interest as well as make enough profit. So they are only kept in existence because they're of constant, injections of credit. So that's one element. So there is not enough productive investment. Investment in the United States has been essentially very low for a very long time. So this has over 40 years of neoliberalism, over 40 years of progressive financialization. You have an economy in the United States that has lost most of it, a lot of its important industries. And what remains now, the leading US corporations are really corporations that rest on their monopoly power in one way or the other. So, what are the leading US corporations? What kind of industries do they belong to? Number one, there is, of course, the fire sector. So, the fire sector refers to fire insurance and, finance insurance and real estate. So, essentially, all of these are essentially based on a form of monopoly, in the sense that banks make money because they are essentially franchised by the government in order, to perform certain functions, which they perform spectacularly badly. Real estate is based also on the monopoly of the ownership of land, and so on. So that's the first thing. Then you have the military industrial complex, and the military industrial complex is also a type of rentier industry, because it does not really have to compete with anybody. It can make sure that it will always have all the contracts it needs, by ensuring that the government in Washington keeps giving it contracts, and they do ensure that by essentially funding, elected officials, including the president, in their election campaigns. And of course, they rely on the expansion of NATO to keep expanding their markets. And as I've already said, this extremely expensive military industrial complex is not capable of producing the quantity and quality of arms that would be necessary for the United States to succeed in any of its military adventures. Back in 2018, I believe, President Putin announced that Russia had developed hypersonic missiles. The US still does not have hypersonic missiles. The Chinese have developed them, but this extremely mollycoddled military industrial complex has not been capable of producing it. So you can see the dire state of US industry. And then you have other industries such as big pharma and other related enterprises that all rely on big pharma, and of course IT, information and communications technology, ICT. All of these rely on the imposition by the US, or the demand by the US, that the rest of the world comply with US patent and intellectual property rights protection, a power that is being reduced. So this is the type of American economy that we have now. It's an economy that is essentially dominated not by, it's ironic that 40 years, 45 years into the neoliberal period, rather than creating competitive enterprises, what neoliberalism has done is created large corporations that rely on their monopoly power to shift more and more of income away from working people, away from the rest of the world, and towards themselves. And that is, of course, what also forms the foundation of the astronomical inequality that we witness today. It is greater than ever before. If you think that feudal lords enjoyed, greater, they were beneficiaries of greater levels of inequality, that is not true. Today's captains of industry are much bigger beneficiaries. So that's my answer to your first question about deindustrialization and the character of US capital today, and the relation of all this to financialization.
Thank
As for
you.
yeah. So should I answer the other two?
Yeah, absolutely. And let's just go on to the recent BRICS Kazan conference. Just some thoughts, reflections, what you made of it.
Well, okay, so I would say that the BRICS countries, a lot of people have argued that, BRICS, the importance of BRICS is exaggerated, because look at, They are only a large part of the world economy by purchasing power parity measures rather than by nominal measures, that their cooperation is still limited, that they have not been able to launch a new currency, as they have said, they have not been able to effect de-dollarization, etc. But my argument is always that the rising importance of BRICS countries comes from two sources, not just one. One source is indeed whatever efforts the BRICS countries make at gatherings like Kazan and previous BRICS summits. But the second one is the declining productive as well as imperial power of the West. I mean, basically, you look at any part of the world, you look at the South Pacific, you look at Africa, you look at Latin America, everywhere, China in particular has emerged as the most important economic partner for the overwhelming majority of countries in the world. What's more, what China is able to provide in terms of investment, in terms of aid, etc., is far more than what the West provides. So the decline of the West is as much giving rise to the trend towards multipolarity, BRICS, etc. And the reason I emphasize that is that, I will readily agree with anybody who points out that governments like Modi's in India or Bolsonaro's in Brazil, which was the previous government of Bolsonaro in Brazil, these are not exactly model governments that are trying to develop their country and assert their independence and autonomy of their country to limit the operations of imperialism. On the contrary, these people love the United States. They would love to rush into the embrace of the United States. They represent elites who want the same thing. The irony is that even though they do, they are constrained from running into the arms of the United States because the US has so little to offer. So that right now, for example, India has to, instead of becoming a firm ally of the United States in terms of the Quad and so on, the quadrilateral dialogue, which includes India, Japan, Australia, I think UK, yeah, India, Japan, UK, and US. So instead of that, what they have to do is to talk about multi-alignment and so on, saying, making the best of a bad situation and say we are going to pursue multi-alignment because the fact is they need cheap Russian oil, because otherwise inflation would go through the roof in India, would become ungovernable by people like Modi, who are incapable. In fact, what they are really driving India's economy into the ground. So instead of developing it. And of course, they also like cheap Russian oil because they're crony capitalist friends, like Gautam Adani, who's just been indicted by US courts for some huge corruption he was engaged in. But people like him and others, the Ambanis and others, they are making a lot of money buying cheap Russian oil and then selling it onwards to the Europeans and anybody else who will buy it, taking a cut in between. So I agree that there are, it's not guaranteed that these five countries will always have governments that will advance the cause of the BRICS. They won't. And now even the expanded BRICS. But nevertheless, the fact is that history is pushing them away from the United States and from the West. Of course, I should say one other thing, which is that the United States, the Biden administration in particular, by causing the war with Russia, essentially the Ukraine conflict is really no more than a proxy war that the US is waging against Russia. And the West, particularly the US and the UK, have had it in for the Russia for a very long time because what they see is a big country which is sitting on top of lots of resources and they want them. But the thing is, just because you want something doesn't mean you can get it. So Russia is putting up, of course, a very capable defense, but Russia is therefore also being pushed into the arms of the Chinese. And if the rhetoric from Russia is anything to go by, they have essentially realized that the West will never be a friend of theirs. So this is further accelerating that trend. Now, whether the Trump administration, by pursuing a more pragmatic policy towards Russia, manages to somehow win back some element of some parts of Russia to ally with itself, remains an open question. We'll just have to see. A lot may happen between now and January the 20th, which brings me to the elections. The US elections, I think, are more a defeat of the Biden administration than the victory of the Trump administration. While Trump did gain a couple of million votes more than he did before, really the Harris actually has had far fewer votes than Biden or previously Hillary Clinton. So in that sense, and in practically every demographic, except I believe over 65s and college educated women, Trump got more votes this time than he got in the past. So that's really something. And I believe Washington, D.C. was the only US jurisdiction where Trump did less well than he did before. The reason is not because Trump is particularly attractive. The reason is simply that the Democrats in the present, and the kind of policies they have pursued for the last several administrations, going back at least to the Bill Clinton administration, I would say that the Democrats essentially have pursued a neoliberal policy, coming back full circle to our discussion of neoliberalism. What they have done is pursued a neoliberal policy and combined it in order to retain a bit of a hue of progressive politics. They have combined it with what I call tokenistic social liberalism. That is to say, they claim to care about the rights of black people or women or what have you. But their version of caring about the rights of these people is to appoint one or two of these members of these groups in high places, while the condition of the rest of the people, black people, women, minorities of various sorts, remain exactly the same or even get worse, which is why you've seen that Trump has gained in this. But what these people need, what the vast majority of working Americans need, no matter what gender they are, no matter what color they are, is a progressive policy that will abandon the neoliberalism and financialization of the last so many decades and pursue a policy of reinvigorating the American economy, which will require disciplining capital. It will require increasing the amount of state intervention in the economy. Essentially, it will require the abandonment of neoliberalism and therefore also at least the beginning of the abandonment of capitalism, because quite frankly, capitalism cannot take any other form today other than the neoliberal form. So it will require that. And in this election, maybe I'll close by saying this: Jill Stein's platform, and to some extent Cornel West's platforms, were the ones that were and Jill Stein had a much more elaborate platform. So her platform, which was in favor of people, of planet and peace, this is the kind of platform that ordinary Americans need if they are going to progress. But unfortunately, so far, the duopoly in the United States, which today has nothing to offer the ordinary American, is still in place. You know, the Trump administration has won by saying, again, this time as much as it did in 2016, it won by claiming that it is going to address the problems of ordinary Americans. But last time Trump got lucky because the problems of the American economy really emerged only towards the end of his presidency. But now the American economy is in very deep doo-doo. And it's not clear that Trump has any policies, whether it is tariffs or deportations or whatever. These ridiculous policies are not going to help solve anything. It's only going to make things worse. And the kind of policies that you would need, industrial policies, policies that aim at expanding the incomes of the bottom of, I would say, the bottom two-thirds, certainly the bottom half of the population. These policies are nowhere to be seen in Trump's policy toolkit. So what can I say? The next 4 years are going to be a pretty rocky ride. We'll all have to fasten our seatbelts, as Americans as much as the rest of the world.
Thank you so much for that. Yeah, I'm going to wrap up there. Until next time, I highly recommend, as always, please checking out the work of Professor Desai. Until next time, people, take care.